Good evening, friends. This is your own CPA, Sanjeev Gupta CPA. In our dollar update topic of the show, the Federal Reserve is getting ready to raise interest rate. We have been talking about this earlier in earlier shows, and we are expecting that they were going to raise at least 3 to 4 times or more during this year. And this time they given a specific time, like month. Basically, they're saying in the month of March. So at least that we know it's not going to happen now. Maybe in the month of March, you will see. Right now, the interest rate is near zero for now. During the subsequent press conferences, the Fed chairman, Mr. Powell, confirmed that inflation continued to climb into the end of 2021. At now, it stands around 6.7 to 7%, and the inflation is going to peak in early months of this year. Maybe first quarter, second quarter. We have to look into it. And on top of it, we have this problem of Russia and Ukraine versus the NATO countries. Maybe the Cold War is heating up, which has been under the covers for last 30 plus years. What can happen is anybody's guess. Maybe it's just fearing tactics played by both the countries, both superpowers. Maybe something will happen. Something we have to keep our fingers crossed. Hopefully, resolution will come forward, and this will be de-escalated down. And we all should be worried about handling this COVID scenarios rather than this Cold War scenarios. How can a country think about going after another country at this time and this period when we are suffering from COVID around the world? 408-912-5038 is the studio line number. 408-912-5038 is the studio number. You can call the studio for your tax question. This is tax time, remember. For tax year 21, a lot of questions people have in their mind. Listeners, if you have some tax burning questions and you want to connect with a CPA on air, this is the time to connect with me, Sanjeev Gupta CPA. The studio lines are open, 408-912-5038. My firm, Sanjeev Gupta CPA, has offices in Fremont, Sunnyvale, Pleasanton, and we have a team of experienced CPAs, CAs, enrolled agents, and accounting professionals who are all very well knowledge and experienced on the U.S. tax rules and regulations, but also with foreign rules and regulations, particularly India. Of course, the rules in India are complex, and you really have to know about them, and then you have to record them on the U.S. tax returns with all the guilty taxes and 5171s and F bars and 8938 and 2555 forms. All those complexities come into it. So definitely my team members are all ready. If you're looking for tax preparation, if you're looking for consultations, you have to call one number connecting all three offices, 510-825-7563. My team members speaks multi-languages and they're available year-round and not just during the tax season. You don't receive notices during the tax season. You receive the notices from IRS, FTB, EDD, you name it. You have all those tax agencies, not during tax time, but during the entire year. And you need a support base to provide that support. A team that can pick up the call, talk to you, and give a solution to your problem. That's what I've trained my team members into it, and I'm really glad that all these people are available year round for your support, for your help. Right now, if you have a tax question, you can connect with me on air, Sanjeev Gupta CPA. The studio lines are open, 408-912-5038. 408-912-5038. Myself, not only CPA, but also an experienced chartered accountant, having practiced in India for 12 plus years before coming over to US. And we have been dealing with all kinds of tax reporting complexities for the last, I say, 15, 20 years, more so in the COVID years with all those PPP, ERCs, unemployment compensations, advanced child tax credit, you name it, the rules have changing from Secure Act that was passed in December 2019. Then we have CARES Act. Then we have American Rescue Plan Act. Then we have Infrastructure Jobs in Jobs Act. Then we are looking at Build Back Better Plan. I don't know what is going on with that plan. People were so worried last year, remember? They were saying, oh, maybe the taxes are going to go up, the capital gains and everything. I don't know where these plans are there. Hopefully, they will act something. Right now, the Democrats are so busy with politics going around. So we'll see something comes up maybe next month. We'll see and find out where that plans, Build Back Better plans, stands. We have a caller here. Let me take this call. Good evening, this is Sanjeev Gupta, CPA.
Hi Sanjay, my name is Srini.
Hi, Shini.
So I
Go
have
ahead
a
with the
question
question,
about
please.
the W2. So I'm actually like a full-time employee doing two jobs on
Hmm.
W2.
Hmm.
So I wanted to understand are there any ways to save on taxes, or is there anything I can do to kind of minimize the taxes? Tax impact on this. Yeah.
Yes, so there are definitely different ways of saving taxes. Of course, you need a proper guidance on that one. Maybe we can connect on one-on-one basis and look into your scenarios. But generally, for tax saving tips, you have really have to look into retirement plans. You have to look into different kinds of plans that save taxes on a long-term basis, like 529 plans or HSA plans, and all those plans are out there for W2 earners. And we are going to talk about during this dollar topic of the show. We're going to talk about the W2s that you receive and what things you have to look into it, and that can really help get you maximize on tax savings. Just stay on and listen to my show, and you'll get some ideas on that one. Okay.
Okay, because my income actually doubled, so I don't know, like the tax bracket would obviously be higher bracket. So just trying to see like what I can do, to minimize
Yes.
the tax.
Yes, so it all depends upon, like I said, there are several strategies you can use, which can again we have to look at your particular scenarios and guide you something. Generally, like I said, there are ways to save taxes. Like you can look at a 401k, but if your income is generally very high, you can look into contributing to HSA plans. Uh, but again, it will depend upon case by case basis. So I will definitely appreciate if you can give us a call back after the show at 510-825-7563, and we can set up some consultation for you. Okay.
Okay, cool. Thank you very much, Sanjay.
Thank you. Thank you. Really appreciate your call. Listeners, this is a time to connect with the CPA on air. This is Sanjeev Gupta, CPA. The number is studio lines are open 408-912-5038. 408-912-5038. So my website, sanjeevcpa.com, SANJIV, sanjeevcpa.com, contains a lot of information, up-to-date tax and financial information. So you can always log into my website and get all those informations. Uh, we are doing a webinar on February 12th. On 12th of February, we're doing this webinar on tax filing tips. Tax filing tips for individual tax filers and business tax filers, and we are hoping to get some updates on the rules that might change for tax year 2021. We don't know as yet, but hopefully by February 12th we'll get something of it. So it's a time for even the last listener, if we have that question, what else can you do? Definitely that webinar will definitely help to find out ideas which might escape a normal person when filing taxes, whether they're doing online using TurboTax or other things, or any other CPA, that can give you an idea as to what things you can use to save taxes. So the webinar is happening on February 12th, and it's all about individual tax filing tips and business tax filing tips and update on tax rule changes. So our registration, you can go to my website, sanjeevcpa.com, SANGIV, sanjeevcpa.com, and register there. We are all on, we are at 50% capacity for that. It's one of the popular webinars we do for this year, for every year, basically. Generally, we used to do in-person webinars, but of course, during COVID, we have not done the in-person webinars. We have not done our Wealth Summit, but hopefully we'll start doing this in person once we know that it's safe for everyone to attend. We have a caller here. Let me take this call. Good evening, this is Sanjeev Gupta, CPA.
Sanjeev ji, good evening. This is
Good
Naveen.
evening, Ji. Good evening.
Yeah, my question is related to 529 children
Huh?
education plan. Do we get tax benefit on that if we in
Uh, so,
California?
so 529 plans are plans meant for saving money for college expenses. And if you use that money, which you've saved and grown based on your allocations, you can use that money. And if you use that money, do a distribution bundle plan for college expenses like buying books or enrolling into the college for all those college fees and other things. If you use that money, is tax free for the distribution part. But when you contribute to those 529 plans, it comes after tax money. There's no saving. It's like a Roth kind of scenario where you put after
Uh-huh.
tax money. Growth is tax free, but in Roth, of course, you have 15.5 and all those things. You can invest in stocks and whatnot. But here is more into college saving expenses. But growth is tax free if you use it for college expenses for your kids, but nothing else. Okay.
Oh, okay. Thank you, Sanjeev.
Thank you for your call, listeners. This is Sanjeev the CPA on air. This is my show, Dollars and Cents, every Wednesday, 6:30 to 7. This is time to connect with me on air. Studio lines are open 408-912-5038. 408-912-5038. And we have a webinar which is coming up on February 12th on tax filing tips for individual tax filers as well as business tax filers, and any update that might come up for tax filing for tax year 2020-2021. Let's go our tax topic of the show, dollar topic of the show, which is about going to be W-2s. So we know that a lot of people receive W-2s, but not everyone knows how to read it. That's where all the problem comes in. When we get W-2, we get in an envelope and we keep that envelope for tax professionals, or we just open it when we are ready to do taxes online, or nowadays is automatic coming to your system, and online softwares have built up a system where they can take the data from from your employer and put it in on your software on your on your on your on your case, and you don't even see those W-2s because it's automatically going into your going into your account. But that's not the right way of recording, because the W-2s are important information which IRS uses for a lot of things, for home mortgage deductions, home office, state regulations, our ESPP things, retirement plans contributions. So all these things are there on W2. We're going to go cover that one. We have a caller here. Let me take this call. Good evening, this is Sanjeev Gupta, CPA.
Yeah, hi. This is Venugopal from Sunnyvale.
Hi, Venuji. How are you?
Good. Thank you. So I have a question on the capital gains tax.
Go ahead.
I have sold some of my properties in India, which were procured in India with earnings in India. Mm-hmm. And now I have to pay a capital gains tax to the California state. Is there any avenue to save on that tax for the state tax?
So when you are living in California, everybody likes California. We're getting so much fresh air from California, but we realize in later part that we are paying too much also for taking this fresh air. So California taxes not only the California source income, but California also taxes the foreign source income if you are a resident of California. Unfortunately, right, California does not provide any credit for any foreign source income earned. Unfortunately, that is what is happening. And if you have a capital gains, you get a tax credit, a foreign tax credit based on your Form 1116, but you never get any credit for California taxes. So that's unfortunate. That's what happens. There's no way. There's no planning around that. The only way would have happened if before you sell that home, or if you have substantial gains, you leave California for good, not just for selling the home and then coming back. No, you have to leave it for good, maybe for 2 years, and you say all the relationship and everything is gone off from California. It's just a little tough, but other than that, it's very difficult to avoid paying California taxes. And on top of it, you also
if I buy a house or something in California, do I get any kind of a credit or this thing?
No. The reason for that is 1031 exchange is for federal side. California do have 1031 exchange, but they don't allow for foreign properties, gain from foreign properties, investing into California properties. Okay. Unfortunately, that's not happened. Okay.
Right. So I have to pay the whole tax on the capital gains, whatever I get in India.
And plus, you have to understand you have to pay it earlier. Otherwise, the penalties are higher for paying with your tax returns. You can save on that
Okay.
at least. Okay.
Thank you very much. Thank you. I
Thank you.
appreciate it.
Thank you for your question. That was very interesting question on sale of property in India. That's the number one question anytime, every time that we get, and we do a lot of consultation on this subject. Listeners, if you have a tax question, studio lines are open. 408-912-5038. 408-912-5038 is our studio number. So coming to this W2 topic of the show, like I said, we don't even look at W2s, and there are several elements on W2. Several. The first thing is the social security number and the address and the name of the person. These three vital things are there. The social security number can be wrong. It can miss a digit here, number here and there. The name of the person can be wrong, and this happens a lot. You might have done a W4 form with your employer in a particular way. Your name, middle name, first name, last name, or middle name comes first, or last name comes second, or whatever combination we have. But with the Social Security Administration, your name is different when you applied for getting the Social Security number. So there's a mismatching of the name, and that is the number one problem that stops the IRS from processing your return. They keep sending that notices, and you have to connect with the IRS. And connecting with the IRS, you know the trouble there. I call it like lifetime calling them. Anyway, so the name is very important on that one, and the address is the more important, because you have home office, mortgage deduction, property tax deduction, state taxes, other things linked to that address. So you should always provide the current address. If it's not there, of course, on your tax return, you can provide the correct address, but that address is important area. We have a caller here. Let me take this call. Good evening, this is Sanjeev Gupta, CPA.
Good evening, Sanjeev ji. This is Sriram. Great show.
Hi, Sriram.
Appreciate all your information.
Yeah, thank you, Sriram. And you have a quick question?
Yes, sir. Quick question on gift tax. So if I want to gift my car to a friend, what are the tax implications, please?
Okay, so that's a very interesting question. Gift a car to your friend. Of course, you can give a gift to anybody. The valuation of the gift should not exceed $15,000 in 1 year. If it exceed the value of the car, how do you take the value? You can go to Kelly Blue Book, and you need to be honest when you put that value of when you put the condition of the car in those KBB site, so that if any audit or anything happens, you can always provide that this was the status of your car. You take a picture of the car also. So you put when you get that value on KBB, you can print it out, and if it's less than $15,000, you can transfer it. Of course, you have to do all the changes with the DMV and other things. But the gifting is allowed up to $15,000. If it's more than $15,000, also is allowed. Anything more than that, that excess amount will be taken out from your lifetime exclusion limit, and that is 11 million as of now. Index to inflation is 11.5, but it might change later on. Yes, but answering to your question, you can definitely give a gift if it's less than $15,000 without any form. After that, you have to use that gift tax return 709 form. Okay.
The car value is less than 15,000. Will I end up paying any tax?
No tax. Just make sure when you gift something, you put we give something, you put a value, you get a value, how much you bought it for, of course depreciation value and everything. But if its value is too less, you don't like 3,000, 4,000, and you bought it for 30, 40,000, 10 years later,
following
you can
all
give
the guidelines, like look at the Kelly Blue Book, put the appropriate value and all, which is still less than 15,000, then I should be okay.
You should be okay. Okay.
Great, sir. Thank you so much, sir. Have a great day.
Thank you. Really appreciate your call. Listeners, this is Sanjeev Gupta, CPA, talking on this dollars and cents show. If you have any questions, these are a few minutes remaining for my show. Studio lines are open. I can take a quick question. 408-912-5038. 408-912-5038. Now, coming to the W2, the address part, which I just said was an important area of this tax filing, because the address is vital. Of course, people are working from home, and their employers can be based in different state. So that's where the state tax withholding becomes important, because a lot of employers make mistake on that form. They can give the address of the employer, of the employee, but the employer, because the employee is located in different state, they take out that state taxes, not the employee state taxes. And that's where the problem comes, because when that person, employee, goes for filing their taxes, their CPA or the tax professionals can say, oh, you're not withhold taxes, you're subject to penalties. And that guy is pissed off totally and start calling your employer, and what you did this, what you did that. That's a problem that happens. So you can definitely look at the address right now. And if you have that issues, get a corrected W-2 done from your employer. There's a correction that can happen. When you go to there are different boxes on W-2. The box number 1 shows your wages, compensation, net off your 401k retirement accounts. Your box number that's important from tax point of view, which is box number 12. Okay, that's box number 12, which shows different types of compensation benefits. This is the most complex W-2 boxes. One more is there is a box 14, and there's a codes ranging from A to HH. And in this, we have a box 13, which is a retirement plan. If the retirement plan is checked, you have to see that is checked, box number 13. If that retirement plan is checked, and box 12 has a D number, D code, which stands for retirement contribution, you have to check whether you did the maximum contribution to retirement plans. And remember, 19,500 for this year. Age 50 or more is $26,000. So go through that. Maybe they have put the wrong contributions. Make sure that you check with your pay stubs, last year and pay stub, and make sure that that number is reflecting correctly on the W-2 box number 12. The retirement plans is very important area, which can complex your tax return. Now, if that box number 13 retirement plan is checked, but you did not contribute to plans, that is another complex area. So in that case, you definitely have to find out from the employer what happened, why that box is checked. Of course, that you can be a part of the plan and you did not contribute because you wanted to contribute but did not contribute, and they counted you in the return plan. That's where all the problems comes in. So you have to really look into that. And we have a caller here. Let me take this call. Good evening, Sanjeev Gupta, CPA.
Hi, Sanjeev. My name is Abhishek. I have a quick question for you. I know you have a few minutes left. I have a rental property, Sanjeevji, and the way I have set it up is, whatever rental income I'm making, actually all of it is going towards the mortgage of the property itself. I barely have maybe $100 surplus at the end of the month. Is there a way or a strategy to reduce this from my taxable reported income? Because, in a way, I'm not really making any money out of it. Whatever comes of goes out.
See, you are just having the cash flow used towards paying the mortgage, but mortgage principal is not deductible expense. Unfortunately, only the interest is deductible. Of course, property tax is unlimited. You're not subject to $10,000 limit. You can look into automobile expenses if you are looking at the properties and everything. The important part is if you really want to take advantage of the real estate rental activity, you should become a real estate professional and you should budget those out. But we are coming to a very few seconds or so. Thank you for the call, by the way.
Sure.
So listeners, this is Sanjeev Gupta, CPA, signing off from the show. Just wishing everyone to be safe and of course vaccinated and boosted. We have to fight this. Omicron is coming down, but we have to still be watchful and careful and just live our life. Maybe 2 or 3 weeks, everything will be okay. Thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjeev Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjeev Gupta, CPA by calling 510-825-7563. That's 510-825-7563 or visit sanjeevcpa.com.